Good morning. It's June the 27th, 2016, and we're going to have our first market after Friday's momentous announcement that Britain was going to leave the EU. Markets are down considerably. The markets that sold on Friday, the euro, crude oil, E-mini stock indexes in Europe, the FTSE, DAX, and CAC are all down. Japan and China's markets are up. Hong Kong's is down too. So the selling in equities is what the market expects today. Again, what has happened really all this year on bad news is that the Fed is right there on the opening buying everything up. And the selling that is allowed comes after lunch into the close. So they don't mind the market selling, but anybody and everybody that wants to play will be there on the opening bell. And if they can mitigate or buffer or stop the selling during that time frame, they've got a better shot at orderly markets, and that's exactly what they're doing. So we cannot forget that. They are the market. Okay, if the market fails to get to this 133.16 area, we've got a saddle formation forming here. So probably buyers 132.16, sellers 133.16. Everything is pointed up. If the E-mini continues to sell, I imagine we will be higher today, and we have a shot to retest Friday's highs. When you look at the 4 stages of market development, and this is important, it's in Pete Stedelmeyer's book, page 74, 75, 76, somewhere in there. Stage 1, the market moves. Stage 2, you find a price that cuts off the buying. That's stage 2. Then stage 3 was development. So right here, this is stage 3. And if you had to make a guess based on this structure, that the next move would come out of the 132.28 area, 133 area. Now, I don't know if that will be the case, but it's just, we have to strategize. We have to try to look over the horizon. So sell 1 is failure to take out 16 to 20. Really don't like the short side of the market till we see what the stock market is going to do. We get through there, then 33.31, 34.03 for sell 2. On the buy side, right in the middle, kind of right where we are. Last rotate down stopped at 5. And in London, so 1 to 5 is buy 1. Then we'll open it up. 21 to 25 will be buy 2. We have some news. We have trade balance minus 59.3. PMI services 51.2. And Dallas Fed, it was minus 13.1. And we'll have to see what that is. So the focus, I guess if there is a focus, would be PMI services. I think the real focus is what happens with stock indexes today. The powers that be in Europe, the United States, China, Russia, whoever's in power is constant power right now. They have money. They have access to the channels and corridors of power. They, through advertising, through outright ownership, control, have access to the media and sometimes control in our country. The status control, the academia, entertainment, mainstream media, quite a bit of and the government as it stands right now. So it's never easy to dislodge these people. So it'll be interesting to see how it happens in London. The knob spread is expanded. It's over 39 right now. The 30-year is running. So number 1 resistance is just going to be 16 to 24. 31 to 03, sell 1. 11 to 17, 11 to 15, sell 2. On the buy side, 20 to 24 will be number 1. On the buy side, the breakout came from 8, so 8 to 12, buy 1. And then 28 to the buck for buy 2. Actually, let's make it 24 to 28. Okay, looking at gold. Okay, this summer our emphasis is probably going to be gold, crude oil, the bond, and if the E-mini start to allow it to sell, then the E-mini will come back in. Will come back into play, which will make over half the room happy. Okay, so gold, we've got this 4-letter ledge up here, we've got this 2-letter ledge, and we've got rejection above, say, 1350. So this morning, 39 to 44, we have to open it up, sell 1. 49 to 54, sell 2. Really don't like the short side of the market. On the buy side, 21 to 26. Then 16 to 11 for buy 2. No matter what happens, I think gold is going to be bought on every dip. It's just, there's just so much uncertainty and so much chaos that's been introduced by industrial tax and social policies that if you can afford to have some, you will have some as a part of your holdings. Much easier to move. Well, it's not easier to move than diamonds. Diamonds are actually easier to move, but diamonds are hard to get change made for. So gold, silver will continue to find buyers on weakness. Okay, no reason to expect the euro to recover today, but in our 4 stages of market development, this is 1, this is 2, and this is 3. This is development right here. So we know we have a seller basically at 111 right now, and we may have a buyer at 109.50. Pretty close to that right now. So we're at 110, so 109.75 buy 1. Not too interested in the long side. 109.50 buy 2. On the sell side, 10.75 sell 1. Going to give it a little room. 10.50 might really be where resistance is. And then 111 even for sell 2. And frankly, 109.50 might be a little too close, but it is. This 75 to 50 is where we are. Next stop beneath that, you can see basically 109. We got the low volume number at looks like 108.97. So the euro is a sell, in my not so humble opinion. Okay, crude oil is being worked to the short side. Fundamentals point to it. 47, like we said, is potential support. Then it really drops down to 46. And we've got this low volume number at 47. We got an attractor at 46.25. We had these lows over here right at 46 the last time. So projected prices below 46.83. We're at 47, right, 48, right, 47 right now. So 46.50, 46.75 by one. Then 46 even, 46 and a quarter by two. I do like the short side of the market better. On the upside, 47.50, 47.75, sell one. Then 48, 48 and a quarter, sell two. And we're going to go take a look at several charts on the E-mini. You can see that we've got a very, very clean break over here. That low, that 1985 is kind of where we are. We've got this high right here at 2007. That was one of our points this morning, 2007 to 10. So basically 1985, 1995, pretty good support. Got this low at 2021. Got those lows at 2012. So that 2015, 2020 is probably pretty good resistance as it stands right now. If we bust the 1985 area, that changes from support to resistance. Then the next little real clean break in the market is down here in the 1940 area. Looking at F1, 1965, 1960-65 is the low volume number. Next low volume we're looking at right now is in the 1993 area. So 85 to 93 structurally, it's pretty good support. If we can stay below this low volume number at 2014, then we should, go for stops below 2000 and look at that 1985, 1993 area. And this is what you have to do to maintain perspective. The only entity that would be buying stock markets big time today is going to be the Fed. I mean, the fundamentals are all against it. So people will see the 50, 100 lot traders stepping up to the plate early in the session. It is the Fed. They'll go with them. And short covering rallies are 30 to 40 points. We saw that on Friday. We rallied 35 points off the day's session opening. And that just what that does, that just keeps players on the sidelines. They can't come out and sell with impunity. Now, from my standpoint as a large institution, I kind of like the Fed coming in and doing that. I don't have to sell into the hole. I can move my paper securities at a better price. So we'll see if that happens. So I mean, the first little band of support down here is basically 2,000. So our first buy will be, and I really don't like the long side, but it'll be 2001. 1996 buy one, then 86 to 91 for buy two. Here's your tractor at 88 right there. On the sell side, 9 to 14, then 19 to 24. And we've got right up here a limit sell at 27.50. Would be structurally where it is. We get through that, then we got this high volume number up above. Let me write these numbers down. We'll go mark that. 86 to 91 would be prime buy territory because of the high volume number at 88. And our tractors at 43. Okay, it's going to take a bit to get everything up and running. Trade balance minus 59.3. PMI services 51.2. PMI services could come in lower than forecast. And Dallas Fed, don't know. 13.1 for manufacturing last month. In a bit.